Hey guys, welcome to the Chinchilla Pickin' Podcast. Yet again, I am back. I know. Brandon does a great job by himself, but I'm back. We are here to be entertaining, educational, and uplifting because we want everyone to make money. It is April 29th. April's almost over, Brandon. I can't believe it. It's almost May. How are you doing today?
Great. It's mushroom picking season, so me and my girlfriend have been spending a lot of time out in the woods. She's a lot better at it than I am. I'm colorblind, so I'm basically just following her around and listening to podcasts. But
so that was where I was gonna go with my next question. I was like, I know we're meant to be talking about stocks here, but you are colorblind and you're going out mushroom picking. It's just
yeah, it works really well for her. But
you pick the wrong mushroom sometimes. You're like, and she jumps and don't touch that one.
No, I can't see them. So I'm just out there, to be supportive, because I'm a good boyfriend, and...
So you're walking around. You're just walking around, and she's actually mushroom hunting.
Yes. Yeah, and usually it's I think this is the way we get back to the car, and then she's like, no, we go this way, and then I just follow her, and she winds up being right.
So, not only can you not see the mushrooms, you don't know your way around.
I have no idea. I don't know where I'm at. Or what I'm doing.
Oh man, guys, it's a great day. It's been April showers where I live lately, and hopefully we're gonna get some May flowers. Hopefully we're gonna get some nice blooming from all these downtrodden May days.
Are we on NPR right now?
Right?
April showers bring May flowers with David Underwood.
Wait, don't tell me. Anyways, for those of you guys show, let me explain how this works. Brandon and I will get together about 10-15 minutes ahead of time. We'll tell each other what we're going to talk about, and then you hear the live exchange in real time here on it. We take turns going first. Brandon, if you don't mind, I would like to go first this week. Can I go first?
Yeah.
Thanks, man. See how easy that is, guys? If only every decision between two different people worked that well, we would have a great place. All right. Where I want to go in the first is I want to go and talk about some stock offerings, because some companies have been having stock offerings lately, i.e. GameStop had a stock offering and to raise money. They also had we talked, I believe it was 2 weeks ago, about one of the higher ups at GameStop sold off all their shares and was exiting the company. Why are these companies having stock offerings and then the stock is going up? When was diluting shares a reason for a company to move higher on stock consistently? Now stock offerings can be a good thing when... All right, so hold up. Before I let you talk, because I know you want to say a few things here, but that could be a good thing, Brandon. That could be a good thing. If a company is selling stock, having a stock offering, raising some money to buy new warehouses and fulfillment centers and buildings in different places because they're growing so fast that's what they need, that's a good reason for a stock offering. In the case of GameStop, they're using this money to create a more online digital representation, and I'm just thinking, GameStop's been around how long? It's 2021. You're just now getting around to this, or did you see an opportunity because your stock shot up so much to now take some of this piece of pie and put it back into the company and maybe do something because you couldn't afford to before because your company hasn't been running the best lately? That's my question. Oxygen, same thing. Stock offering. Oxygen, they're trying to raise money. Reported last night, and I want to say this correctly, so I'm going to read from here. Uday Kompella, one of the directors, reported a sell of 350,000 shares of Oxygen. So one of the directors is selling insider trading shares, right? It was also reported two other directors are selling shares. So there's insider trading going on. It's being prolonged over the course of the past 90 days that more insiders are selling shares of Oxygen. Oxygen as a stock offering, the stock goes up. After it was falling after our first podcast, and I said it was going to fall. it started falling, and it kept falling and went down to $4.79 for its low, and now it's back up above 11. And I just don't see when was diluting shares a good thing? Buying back shares a great thing. Diluting shares, I don't get it.
It's a mania. It's an absolute mania. But in the long term, it won't be good. The guy sold his shares because he obviously doesn't have enough faith in his company to match up the people that are buying the company right now at the current valuation. So I don't understand why you would buy it right now, other than, hey, the stock offering's over with now, so time to buy, I guess. No, your shares are still diluted. You've still lost value for the company.
Much anymore.
And who's GameStop going to be competing with in the online space? Xbox and PlayStation, maybe Amazon. They, in my mind, like, there's no, I don't want to say no chance because crazier things have happened, but they've got a long uphill battle.
Right? I mean, why are you going to pay for a GameStop membership, quote unquote, when Xbox already has some memberships, PlayStation already has memberships, Nintendo Switch already has a membership, all these other systems already have memberships. Oculus is going to be having a membership soon as well.
Yeah.
All these systems already have their own memberships going. Like, why am I going to pay more money for a GameStop?
Yeah, GameStop's not going to compete with Game Pass, Xbox's Game Pass. I mentioned last week I just got MLB The Show 2021 for free off the Game Pass. Like, no, GameStop starting from the bottom in this situation. They're not going to compete on that level. I don't care what anybody on Reddit says. It's a bad idea to buy. But it's a symptom of a mania, and I hate to say it, but like I was rooting on the GameStop thing because I wanted to see those hedge funds fail, and I loved watching it. But now, because I'm starting to see GameStop and companies like it be symptomatic of a potential equities bubble, I really want to see these things drop.
Right, because you want the companies to actually be valued for what they bring to the table and not just hype and hysteria.
Right.
I'm gonna put on edge one of our Brandon and I's acquaintances, one of my relatives right now, and I'm gonna call out the Wall Street bet move on MVIS and Microvision and how it moved up, and they're calling it to go to $100. And I privately talked with Brandon and a couple other friends privately, not in our stock group that we're in where everybody is in there, and I said that I can't see MVIS going much higher than what it was, and that's when it was at $17 a share. And I just don't see the value in it higher. There's too many other players in LiDAR going on. I saw the value in MVIS at $2. I don't see the value in MVIS above 17, 18. I just don't. Maybe I'm missing something. I just don't see it.
Recent development here. After hours, Microvision is now down 17.72%. I believe they just reported earnings, okay? But keep in mind, even now at $14.67, which is where they're at, the market still values them at $3.73 billion. This is a company that has just a little bit more than $1 million in revenue last year.
That's unheard of, Brandon.
Yeah.
That's unheard. I mean, can you imagine something like that happening just 10 years ago? Just
No.
10 years ago.
No.
It would never be. It would never happen.
Yeah.
But nowadays, that's just normal. And
I'm glad you brought that one up. I'm glad you brought that one up. Our mutual friend has been in this, I think, for 17,000% or something like that. So he's done really well. He's called the pop on this, but now it's time, I think, to put it away.
Yeah, now it's time to be like the GameStop individual. Sell your shares, move on, have a good day. Thank you for the ride. I made a ton of money off you. Thank you.
Yes.
Go find the next one.
Value matters.
Right?
It may be subjective, but
GameStop overvalued both
yes.
of them. I don't understand why GameStop's not back down to like $24 a share. I don't get it. I can't value them at the price they're at. I can't value Oxygen at the price it's at either. This is just a run up by the Wall Street bets guys, and they're they just holding on to the shares, and good for them. They're manipulating the market. Good for them. This is not how the market is meant to be set up, but I don't want to either regulate it more. That's why I say good for them.
Yeah,
I want to keep it unregulated as how we have it now. If they're able to do that, that's good for those Wall Street bet guys, but I'm not putting my money in it.
There's going to be a lot of people that get burned in the long term, I think.
Yeah, people are going to see. It's like with Microvision. I'll keep using this as an example here. It ran up to $29. All those people with FOMO were like, "Oh, this is going to go to 100." They're buying at 27, 28, 29. Now it's down to 14. They just lost half their value.
Yeah,
because they got in there and they saw the run up and they thought it's going to go on forever because this is the next GameStop, right?
Right.
I mean, that's not how it works, guys. It can't go on forever. The Wall Street bet guys can't keep pumping in money like they are and driving up stocks. There's not enough of that money out there to keep all these afloat forever.
Once we have an actual bubble burst and a real bear market, a lot of those Wall Street bets people won't be in the market anymore. I would actually predict right now that in 5 years, Wall Street bets doesn't even exist.
I don't know about what doesn't even exist. They made a good amount of money off that GameStop. They're going to have some money to play with for a little bit. Now, a lot of the people that follow them are going to be upset with what's going to happen is they're going to lose their money. They're going to lose the majority of it, if not all of it. It's the Joe Schmoes who are following them with the $5,000 they managed to put together and put in an account. And they're going to lose most of that. They're going to pull out at the end with $500, and they're going to say that you can't make money in the stock market. And stock trading is only for the lucky and the few, and not everyone could do that. And my response to them is you just did it wrong. You did not listen to the right people because you were trying to turn that $5,000 into $1 million in 2 months.
Yep.
And you just have to do. I love my plan of 5% a week because it works and it's simple. It's 1 to 3% trades 3 times a week, and you're set for life, guys. It's not hard.
Do you think that last year, when COVID happened and the market corrected because of it, I know technically we were in a bear market for a split second, but I don't think that was an actual bear market. I mean, a lot of people survived it, and so they can say they survived a bear market without panic selling, but that was a very quick and swift recovery, and the buy the dip mindset never went away. So in my mind, I think we're still in the same bull market psychology that's been building since 2009.
Right? You just keep buying the dip, and it will always go back up.
Right. Eventually, that's going to stop.
It's like pre-2008. Houses never lose value. Housing will never lose value. You can't lose money in housing.
Right.
I mean, that's literally what people... You go to those real estate realtor seminars back in 2004, Brandon, and they're going to sit there, and they're going to look you in the eye, and they're going to say, I mean, if you raise your hand and question about, like, what if the housing pricing goes down? They're going to be like, what? That's never going to happen. Stop. And this is what they actually taught you in classes in school. Like, that's never going to... They said that. That's never going to happen.
Yep.
And what happened? It went down.
And in 1999, stocks could never go down. We defeated the business cycle in 1999.
Yeah. Yeah, we defeat. Yeah, anyways, we did. Yeah. But let's look at someone else's numbers. Let's move this conversation along here, and let's look at Amazon. I know this is one that you've been posted about a few times on our Instagram page. Follow us on Instagram, Chinchilla Pickin', and Amazon has been one that Brandon has traded off and on, and I've always liked Amazon long term. It's a growth stock, and it's going to continue to be a growth stock for the near future. But Amazon popped today on earnings, and their message to a lot of people was they were trying to be the dream, the goal employer to set the example for all other corporations out there. I'm sorry if I get a chuckle there, just because of all the bad news you hear about Amazon and all the employees. Now, maybe they are just that big, and so they're always going to find something to complain about, But they are the second biggest private employer in the United States. And their earnings were great. They popped. They had a great earnings. They came out there and they said they're seeing the biggest growth right now in their services and in their media. And they're using all their money for their media, and they're buying up things like sports TV, like NFL games or Major League Baseball games, and they're putting their money in to try to get like the big All-Star games and some playoffs. And that's what Amazon's investing in for the media, and they want to see more growth in this. Is Amazon, Brandon, trying to be the umbrella corporation?
Yes. I don't know if it's not as evil. Okay. It's not as evil, and I'm not really against it. I'm not against them getting bigger. But, I mean, they're expanding into Asia, too.
So what's next, then? Are they going to try to do the whole WeWork thing and try to create the old livable spaces so that everyone lives like this in the same housing and the same developments? And, are we going to see Amazon Real Estate and Amazon Development Corporation?
Well, I don't think they'll be as stupid as WeWork. Who wants to share an office space with their competitors, let alone an open office space?
Yes,
I don't know.
Right? Yes. Yeah. Yeah. But I mean, Amazon, I like it. I think it's going to continue to grow. Their media business is definitely growing. I used to have the Prime membership. I don't have it anymore.
So is Cloud.
To be honest. Huh?
Cloud's a big one for Amazon.
Yeah, the services. That's their services and media are the two biggest, and the cloud services. But because of recent events in the atmosphere and politically charged events, other companies are now starting to sprout up and provide those same services. So a lot of companies are looking to switch because of what Amazon did to such companies and pull them because they disagree with them. So people are afraid to disagree with Amazon, so they are looking for other competitors to go with, and that's a concern of mine. Is once Amazon stepped their foot out there and made those calls, now that people are asking, like, is this going to happen to me? Do I want this to happen to me? Should I look for someone else to host?
So, like Parler.
Yeah.
And there's plenty of other options out there.
But there's not that can host as big as you need. There's not a lot of options.
But they can grow. What is it? Blue I can't remember the name of that website that's so popular now. But there's the blue one, which I can't remember the total name of, and then there's GoDaddy. But yes, I don't know that they have the server power that Amazon does. Eventually, somebody will.
I mean, you would have to. I mean, they are creating them right now. There are people out there trying to create these competitors, and it's because what Amazon did. They saw that. They see an opportunity to go in there, create the competition, and this is what capitalism does. Now we're going to have competition in this market because of what one time Amazon did to one company. It's creating competition and competitors.
Yep.
They did it to themselves, basically, you could say. So, yeah, they're going to have growth in it, and they're going to have growth in it for the next year or two because these competitors can't get up and running. This isn't something you turn a light switch on and you get up and running in a month. So they're going to continue to have growth in these services. Amazon's going to continue to go up in price, barring a recession.
Yeah. Well, I mean, it had been pretty much stagnant since Labor Day last year, and now earnings, it seems to be in after hours, it was pushing up, so I think we're breaking that stagnation pattern that it was in. We could see it go as high as 4,000, maybe. I don't know. I can't pretend to know if that's going to happen or not, but it could.
And then at what point do you split your stock at Amazon? What point do you do stock split, or do you just continue to let it grow?
I don't know. I'm surprised they haven't done it yet. There's been so many rumors out there after it worked out so well for Apple and for Tesla. I really thought they would be right behind it, but they weren't. But we'll see what happens.
It worked out amazing for Tesla, and the Tesla's run ever since the split. Every time they would shoot up, Brandon would buy in and then it would drop real quick. That was a big joke for a while.
Hey, I didn't do it after the split. That was like, this is my white whale for some reason, is Tesla. It's the one that I can never bag. I can never get it. I just stopped.
You never, because you always kept trying to time it, but you believed in the company. You should have just left your money in and you would have made it over time.
Yeah, I should have.
It's like me with Coinbase. I can't even say it right now. Coinbase. I put my money in. I'm down right now, but I'm not pulling out. I'm leaving it in there. I'm holding that, man.
Yeah.
So, anywho, on to my last topic here, and it's the capital gains tax hike. And the reason I bring it up on the stock investment show is it has a direct effect on stock investors. They're doing the capital gains tax hike and the corporate tax hike because they want to pay for plans that that the government's trying to push through Congress right now. And whether or not you agree with the plan or not agree with the plan, I'm not talking about the plans, okay? I want to talk about how they plan to pay for the plans. So, because this isn't a political show, we're not going to talk about what's in the plans. Let's talk about how they want to pay for it. With this capital gains tax, you could say that was a tax on the rich. I would say as the latest you probably could have gotten away with saying that 100% true was the 90s. Early 2000s and then on via the dot-com bubble popping up and E-Trade popping into existence and other companies popping into existence, Scottrade, and those that are no longer around like those, that came up and offered those $12 trades, $7 per trade, and lower cost trades, and allowed the everyday person on the street to go ahead and open a trading account and start trading the stock like they were a real estate broker in New York. All of a sudden, when that happened, now it was no longer the rich that were trading and getting taxed on capital gains. Now it was everyday people who are trying to put aside money and push their own selves up to the next step on that socioeconomic ladder and really create their own second avenue of income stream on their own, doing the hard work, saving up the money, saving up that $1,000 or $500 or whatever they could get in there, put it in there and trade it and grow it and do what they can with it. And so when you tax that, you're taxing those people. And that's what you're taxing. That's who's going to feel it the most. You know, that's who I feel will feel it the most. And yes, you are only taxing the gain. So you are only taxing the positives. And I understand the proposals and you're willing to do it that way and the corporate tax and everything. My second part, I want to make that statement, but then I also want to ask this question. To make this all work out and for all these plans to be paid for, Brandon, you cannot have any dip in the economy. You cannot have any kind of recession, a correction, a pullback, because then the revenue will not be there to tax.
And then what's going to happen? Are you going to have like stagflation from the 1970s where the government has outspent itself and then we hit a recession so the dollar continues to drop in value even though unemployment goes up?
I think we're already getting to the point of we're outspent ourselves. We outspent ourselves last year trying to protect ourselves from COVID-19. And, you know, I'm not going to, again, I don't want to talk about the validity of the plans because it's already spent and paid for, but we already spent trillions and trillions of dollars. And if you ran the government, if I ran my personal household, like the government runs this country, I would be broke and in jail for owing people money.
You'd be evicted. I'd be evicted.
Yeah. I would have my car towed. They would come and take every last asset I had.
I wish I could just print money from this printer to pay my taxes.
You're hoping that we never have a recession, and you're just not. That can't be true. It just can't. And so these capital gains tax, I'm against it because you're taxing the Joes trying to reach the next level by creating a second income stream while they're working jobs, spending their extra times that they have to research, invest in stocks, and grow their money. And then, you know, you're hoping with the corporate tax that we're always going to be growing in a positive economy, and that's not realistic either because it's a business cycle. Eventually, we're going to have a downturn, and then the tax money, the revenue money is not going to be there to pay.
Yep. So I'm not selling any stocks based on this because we don't know what the final plan is going to be, and we don't know what the result of it's going to be or anything like that. But I have positioned myself in GLD. Partially because of this plan. And I mentioned last week it was because I thought the crypto market got too hot and there's still a lot of money in bank accounts from the stimulus that hasn't been spent yet that will be spent during this reopening that is happening. So I think GLD is a good idea. But I also think it's a good idea because of this plan because this is basically another stimulus is what it is. You can call it an infrastructure bill if you want. They say they're creating jobs. In reality, I mean, I don't want to lose listeners over politics, but in reality, what they're doing is they're just taking resources from the private markets and moving it into the public market. You could say it's good or you could say it's bad, but that's what's happening. They're not really creating anything. They're just changing it. But with that being said, there's going to be new money that does enter the economy because they have to print it to spend it, and the dollar is going to go down in value. In my opinion, gold should go up.
Well, they're always going to get you to invest in stocks because of QE, man. QE, they're going to keep those bond yields low. Because what, Brandon? What's the
bonds are dead?
I love it. I love it. Once a show, I get you to say it when I say it. Bonds are dead.
What you just said actually ties into this a little bit, all right? But one of my goals for this show, and I think the most important one, is to get the audience to think clearly about their own investments and their strategies and the environment in which they are implementing them. If the things I say and Dave says make things make more sense, then we've done our job. We want people to have those kind of aha moments, like, oh, I've never thought about it this way, right? So if I can pick a phrase for my portion of tonight's show, it would be this. We may not always know where we're going, but we should always know where we are. We can't predict the future, and you should always be suspect of those who pretend they can. There's a litany of Ivy League educated analysts that for the most part are always wrong about their price targets, earnings estimates. So what makes you think that a guy you follow on Reddit or StockTwits or Facebooks will be correct? A portion of people will always pretend to know everything. A portion of people will always tell you that they don't know everything, and it is the people that tell you they don't know everything that will perform the best in the long run. Since we can't know the future, we should focus our attention on knowing the present, where we are right now, so that we can use that knowledge to better position ourselves for the many possibilities that lie ahead. We should also know the past, although it is unlikely to repeat itself exactly. We can use that knowledge to better understand the probabilities of today and the future. Right? Agreement so far?
Amen, preacher.
Preacher
Amen,
Beaver.
yes.
Reverend Brandon at hand. Okay, so let's talk a little bit about inflation, because we were just talking about that in regards to Biden's infrastructure bill, okay? And we could use this, like everybody's in the past, 10 years, we've heard inflation is dead. Just like bonds are dead right now. They may not be in the future, but they are right now, okay? But inflation is never completely dead. It's much like gout. It sometimes seems to be less symptomatic, but it's always there. And sometime in the future, you bet that it will emerge and be symptomatic once again. There's so many other diseases I could have used.
Talking about gout.
There are so many other diseases I could have used, but okay. A 2003 study by Abbott and Associates, published in their 2003 Bonds, Bills, and Inflation Handbook, found that in the 64 5-year periods between 1926 and 2002, 78% of the time the performance of stocks outpaced inflation. That's good news. Okay, so during years of deflation, stock returns were terrible, losing about 43% of their value. But during years where inflation was above 6%, the average return was a meager 2.6%. So during that time period between 1926 and 2002, there were 14 times where inflation was above 6%. Eight of those times the market lost value. So according to this study, it's not really inflation that we should fear, it's high inflation that we should be on guard for. When stocks respond negatively to medium inflation, somewhere maybe between 2 and 4%, this is probably a buying opportunity. Now, in my mind, if stocks respond positively overall to a large sudden increase in the CPI, inflation, that could lead to what is possibly a bull market, or the last leg of this bull market, a mania. All right, that could be a sign that, like, if inflation stops mattering and we stop getting those dips, so we could be in a mania. So what are other signs of an equity bubble or a bull market mania? Go ahead.
Question.
Yeah, sure.
Recent CPI came out, I think it was a month ago, and I remember watching it on TV, and I believe it was Steve Leisman that came out the CPI numbers. He's usually the one that does the reporting of numbers like that, and he came out with the CPI and the numbers, and the market went higher that day. So it did exactly what you're talking about.
It is something right I think you do need to be concerned about it, right? Like, so the current...
Yeah, and that's my question, since you're bringing it up. Like, is this something that we're thinking is an area to be wary of and cautious with your investments, that we might be heading into a negative recessionary environment, and we need to be looking more for defensive stocks at this time?
So I would look for it more. I would be more concerned if we bumped, I would say, to 4%. Right now we're at 2.62%. I mean, it is up pretty largely from the 1.68% we had in February, but that could just be symptomatic of a rebound and be fairly healthy for the economy. I would be more concerned if we were nudging up against that 4% number.
Gotcha.
In my opinion. And that medium range 2 to 4%. And I think that every time the stock market becomes concerned about something and pulls back, to me, that's a healthy sign. The problems arise in the long term when the stock market just seems to think that it's always going to go up and nothing can get in its way.
Goldilocks environment,
yes.
Right?
Yes. So I want to talk about real quick some other signs of an equity bubble or a bull market mania. All right. One sign is that everybody becomes Cathie Woods. So I'm not insulting her when I say that, because there's aggressive bulls in the market, and then there's bears, and then there's some people in between. And the problem lies when the market loses its bear side of that bull-bear balance, right? So when everybody becomes a Cathie Woods, and they start saying, well, price to earnings, they don't matter anymore. What we really should look at all the time now is forward price to earnings. And who cares about valuations? Warren Buffett, he's underperformed so much. Who cares about all that stuff? We need to really be looking at growth. And that really, really should raise a red flag, in my opinion.
100%. You should always be looking at fundamentals, and it should be a factor in there if you're looking for investments, and if you're looking for future growth and future investments. Now, if you're looking for a day trade, then fundamentals don't matter at all. If I'm day trading, I'm
right
out of that stock so quick that I'm going off the news of today.
Right. So you could day trade Microvision, and that would be just fine, right? But buying and holding, probably not a good idea. And I do think
buy and hold,
I see more and more Microvisions and GameStops and stuff like that. And what's that drug company you mentioned? I can't even pronounce the name. You say it. That's it. Okay, those more of those rise, then that's another bad thing for me. I would like to see those things get chopped down. It would bring me much more comfort. Not to see people lose money, but I think the longer those things play out, the harder the end's going to be.
Yeah.
So
I think we're losing a friend tonight.
I hope, you know what? Maybe one day we can actually have him on the show, or we can go on his show and we can discuss it, because he hit the nail on the head a year ago. 2 years ago he was right about it. But whew, man, it's high right now, and I wouldn't touch it with a 20-foot pole.
Right, exactly.
But another sign. Okay, so another sign of a equity bubble is a high Shiller price to earnings ratio. So Robert Shiller was a finance professor at Yale, and he invented the Shiller PE. This takes the current price of the S&P 500 and compares it to corporate profits over the past 10 years. This is supposed to be better than the regular traditional price to earnings valuation because instead of looking at current earnings, which could be depressed by a recession, it takes total profits of corporations over the past 10 years. When the ratio is at 10% or lower, the market tends to produce higher than average gains over the next few years. When it's over 20%, the market tends to produce lower than average gains. Since the dot-com bubble seems to be continuously, and rightly so, on everybody's mind, you might ask, what was the Shiller PE in 1999? It was a sky-high 44.2%. Today, we're lower, but we're still in the danger zone at 37.84%. Now, I do want to caution people. You should know this. You should know where we're at in the market so that you can take the correct precautions to be defensive or aggressive, whichever way you want to go with it. But the caution here is one thing is for certain, and that's nothing is for certain. And I want you to always be suspect of people who pretend to know where things are going. Some people are perma-bears. They will often brag that they predicted about the previous crash while forgetting to mention that they've been predicting crashes every day of their career and they've been wrong 99% of the time. Others are perma bulls and they sell over-the-top optimism. Analysts take these positions because they are easy to sell to the general public. There will always be doomsdayers who will always buy fear and negativity. And there will always be a large demographic of the public willing to pay for anything that will make them rich. Or they think will make them rich. Just for laughs. Okay, we were talking about this prior to the show. Let's take a look at some of the book titles published in 1999.
I can't wait. This is going to be the highlight of the show for me.
You'll see a common recurring theme here, okay? First off, we have Dow 36,000 by James Glassman. Keep in mind, 22 years later, after a large expansive bull market, here on April 29th, 2021, the Dow still hasn't reached 36,000. But analysts, still, they're not going to be outdone. They're not going to allow themselves to be outdone, okay? So soon came Dow 40,000 by David Elias.
Nice.
40,000, David? You could do better than that, apparently, said Charles Cadlick, who soon after published Dow 100,000.
They sound like the Wall Street bettors of their time.
They were.
Okay, take this to the moon.
Often, these people are often Ivy Leaguers. They're not stupid. They're just snake oil salesmen, I think. And the bottom line is, for analysts, it pays to be perma-bears or perma-bulls. But for investors, it pays the best to be a realist.
Yeah, exactly. And you guys got to remember, when you're watching CNBC or Bloomberg or even Cheddar or any of these other stock networks that are out there, a lot of these people, analysts and anchors, get on there and they have to hype it up to sell the news and make it exciting for you. And that's what some of them will do. And you got to weed through that and pull the news out that you need, pull the information out of the story that you need in order to make the trades you want to trade so you can make money.
You do have to.
You do have to. I have to wake up every day and I look at the news headlines, not because I like watching the news. The news is very negative lately. I don't like watching the news. I do it because I want to trade stock and I want to make money. And so I read the news headlines to see what's going on in the world. And so when you watch CNBC or one of these other stations and channels or what have you, listen to the story they're telling you, pull out the information, and then make your trades off that information, not off the hype that they're selling as well.
You have to sift through the BS. The funniest thing about those books were all published in 1999, almost right after each other.
Wow. They're all trying to outdo each other, right?
Right.
Yeah.
So, another big, you mentioned Amazon, right?
Yes.
So we'll shift focus a little bit here.
Are we going to stay in the same letter in the alphabet?
Yes, I will. You guessed it. But a large slate of tech earnings came out this week, and I wanted to talk a little bit about Apple, whose earnings per share came out as $1.40 versus the 99-cent estimation. Revenue was at $89.58 billion versus $77.36 billion estimated. This was up 53.7% year over year. Services revenue was $16.9 billion versus $15.57 billion estimated. Other products revenue $7.83 billion versus $7.79 billion estimated. Mac revenue was $9.1 billion versus $6.86 billion, up 70.1% year over year. iPad revenue $7.8 billion versus $5.58 billion estimated, up 78.9% year over year. Gross margin now above that all-important 40% level that I talk about a lot. 42.5% so gross margin. It was estimated to be at 39.8%. And I want to say, every quarter, every single one, people expect a slowdown in the iPhone sales. Every quarter there's a surprise to the upside. So I don't know why we're continuously suspect that the iPhone cycle is going to slow. Every time.
So America, and it's starting to happen all over the world. They have this. I have to keep up this image that I am. I want to find the right word and I can't find it.
Skeptic?
They got to have the best phone and they got to have a new phone and it's got to look classy and fresh and it. I get it, and it's what Apple sells, and they sell that to you, and they sell that imagination and dream and all that to you. But to me, it's like that's why they're always going to have sales. Their sales are always going to be there.
It's crazy to me. Okay, I understand.
And they make the phone so they'll break easy. So there you go.
I mean, I've still got an iPhone 7 though. So I mean, like if I dropped it, because I don't have a case on it, I'm just very careful with it. If I dropped it, yes, it would break. But it never seems to be, it never seems to go obsolete. I'm still getting the same software on my phone that people with an iPhone 12 are getting, or whatever the newest one is. So it's pretty crazy to me that they're continuously still upselling these iPhones when you can have an iPhone that's like 4 generations old and you're still good. Yeah, but it's part of their genius, I guess.
I understand it and you understand it, but Brandon, you know what that makes us?
Smarter than everybody else.
I was gonna say uncool.
It does. Okay, we'll go with that.
We're officially adults and uncool.
That's true. I am doing this podcast from a 2013 Mac. That's how uncool I am.
I wouldn't admit that. No, I'm just kidding.
I tried to. I was able to download Catalina, which is one of the newest updates for the software on the Mac. And I called Apple because I was having issues, and they were like, "Sir, we don't service those anymore. You're gonna have to get a hold of somebody else because it's too old."
That's how I feel. What people say to me, it's too old.
So
anyways, Apple. Yes, I'm sorry. I think Apple should buy. I've said that every show now. For how many times have we been on? The shows that you and I have been on, I think every show that we've both been on for the past 4 times, I have come on the show and said Apple's a buy.
Yeah. Well, it started, I think, finally being valued as a tech company. It hasn't been that long where we've had a price to earnings ratio of Apple in the 30s. It generally traded in the 20s before. I do think it deserves 30s. You can, I think, sit back and wait for it to drop to its 100-day moving average or 150-day moving average, because it often does, but it always reverts right back up to the mean, comes right back up, which is why
the forward PE of Amazon is 70, dude. I mean, Apple's forward PE should be a lot higher than just 30. But, and they are more than just a tech. They are products. They are media. They've produced movies recently. They are more than just tech.
Yes, so I agree, and It's sort of, this has been the opposite of Tesla for me. Every trade I've made on Apple has been successful because it always comes right back up. And I'm now to the point where I'm like, maybe I should just hold it. I don't know if I would buy it here if you're not in it already. I think you'd be fine to do so, but you can wait.
I would buy it here, Brandon, if you're going to hold it for an investment.
Yeah.
If it's an investment, I would buy here, yeah.
And then just watch the 150-day and 100-day simple moving averages and then add to it when it hits those, because it's just like clockwork. It comes right back up. Because it deserves to. I mean, some more highlights here. Apple's revenue in China increased 87%. Okay? So you could say, well, we're comparing this to last year when China was largely shut down. And you could say, well, yes, the economy was shut down. But I could also tell you, yes, the economy was shut down and people were staying home and people were buying computers. So to have that comparison at that number, 87%, that's huge. And China is a large growing market for technology, all right? A more important number, in my opinion, though, in regards to China, is that around 2/3 of the Chinese consumers purchasing a Mac are first-time buyers.
Really?
Yes. And then another one, here another good highlight, over half...
So that's big. That's big because once you're in that Apple world, it is so hard to get out of it because Apple traps you into their system where you have to get their cloud services through them. You have to get the music through them. You have to pay for storage through them. You have to do everything through them. So now they got you trapped in their system. And so that really surprised me. That there's that many new people going in there.
Apple has turned my life into a Supernatural episode. I'm trapped. I can't get out because I've got all my books on Apple, all my iBooks, all my music, all my pictures are on the cloud. I can't go anywhere, Dave. I'm stuck. Help me.
Not me.
All right. Well, okay. Over $500 billion in economic activity happened in just the last quarter on the App Store.
Man.
And
you've already sold me. I mean, you can stop if you're convincing me. I'm already sold.
Out of all that, the most important and the thing that I like the most, they announced a $90 billion expansion of their stock buyback program, which is up from, I think, $50 billion last year.
Hold up. They're actually buying back stock instead of diluting it? I thought the thing to raise your stock price was to dilute stock.
No, you need to buy back the shares and increase the scale of which your investors own your company. It makes everybody happy. Plus a 7% dividend increase, too. They did that as well.
There you go. All right.
So stock, Apple, stonk, Microvision.
There you go.
Oh, we just lost so many friends.
If anyone takes me... some things from the show, what I'm going to definitely say is, when did diluting stock cause us to raise the stock price? I don't get it. Stock buyback should be what's doing that. Capital gains tax, I don't like it. I think it's going to discourage investing. Amazon, still a buy. Apple, still a buy. Brandon, what's your final thoughts?
Some people may take the Microvision thing personally. I hope they don't. And I welcome disagreements and debate. I love those kind of things. So, send me them if you're on one of my Discords or you have my email or anything like that. Send me your disagreements. And maybe we could even talk person to person because I love talking about these things.
Brandon Beaver at chinchillapicking.com.
Yes, that's my email. You'll be lucky if I remember the password. But that is my email. Just remember, like I said, we can't predict where we're going, but you should know where you're at. So always keep an eye on what the stock market is doing. You shouldn't panic either way. Nobody ever makes money panicking, right? But you invest according to the environment that you're in.
There you go, guys. There you go. Happy Thursday. We hope we're entertaining, educational, and uplifting because we want everyone to make money.
Oh, one more thing. Okay, I almost forgot. I have a podcast, one that I am working on. Okay, I wanted to mention it. It's in my brain right now, okay? So it's not quite completely worked out how I'm going to do it. I don't know that I'm going to be doing it once a week or once every 2 weeks or even once a month. And I don't even know if it's going to be a limited series. But it will be about entrepreneurs and thought leaders, people who have changed the way we live and the way we work in our everyday lives. And it's going to be called Creative Destruction. I will have more news on it in the future, so keep a lookout for that. I'm excited about it, but I have no more details other than that.
On that note, have a good night, guys. Chinchilla Pickin' at Chinchilla Pickin' on Instagram, chinchillapickin.com. Follow us. Look for Creative Destruction coming your way. Have a good night.